Disclaimer. This podcast is for FCA authorized financial advisors only and is not for retail clients. The views expressed in this content and all other content on this channel are those of the individual speaking and do not constitute financial advice or a recommendation to invest in any product, asset, or strategy, including those discussed in sponsored segments. This content is for educational purposes only. Always do your own research and consider all relevant risks before making any investment decisions.
Why did you start a Bitcoin Treasury company and float it on the Aquis Exchange?
No one thought that it could be done, and it was just unbelievable because there's no point in holding anything in pounds or dollars or euros or indeed any other asset. And that was my Bitcoin moment, really.
And it was an incredible IPO, and then it's been a tough few months since.
Markets are always wrong, always either overpriced or underpriced, and that's where you have an opportunity.
What were some of the major challenges of...
You cannot be a company that is...
What could financial advisors learn from Bitcoin Treasury companies?
I think financial advisors would need to think about.
Hello and welcome to the Bitcoin IFA podcast. Today I'm joined by Andrew Webley, CEO and founder of the Smarter Web company, the UK's largest Bitcoin Treasury company. Hi Andrew, why did you start a Bitcoin Treasury company and float it on the Aquis Exchange?
Yes, good question. So I've been investing in Bitcoin for almost 10 years. And I was fortunate enough to find a company called MicroStrategy, which, as everyone knows, adopted a Bitcoin Treasury strategy. And that was my Bitcoin moment, really. That was when I saw Bitcoin, which at the time I thought was a volatile, perhaps a medium of exchange asset, and a public company, and the two get smashed together. And I just thought it was the best thing ever. And it turned out to be quite a successful investment for me. I live in the UK, and I've always lived in the UK, and I love the UK. And I felt that the UK should have one. So I started looking for one, and I looked and looked and looked, and I couldn't find one. And then last year I thought, well, if there isn't going to be one, then I'll make one. So I decided to list my business, a business that I set up 15 years ago, the Smarter Web company, and that's what I did. The reason why we listed it on Aquis was it was quicker and cheaper to get it listed. For anyone that hasn't listed a company on a stock market before, it's relatively involved and it's relatively expensive. So because I was taking all the risk myself, although we did get a few pre-IPO investors, and it was just more accessible to do that. And I think Aquis is a fantastic exchange for a growth company. So yeah, I did it because no one else had done it. And to be fair, as much as some people won't want me to say this, when I listed the business and I spoke to a lot of people in the city, people interested in Bitcoin, some people that have perhaps got involved in public companies, emulating what we've done. No one thought that it could be done, and it was just unbelievable because clearly there is a demand for this sort of strategy, and yeah, I'm ever so proud of what we've achieved so far.
Well, yeah, firstly, congratulations. I think anyone in the Smarter Web community is also incredibly proud of what you're doing, including myself. You've touched on some of them there, but what were some of the major challenges of floating or launching and floating a Bitcoin Treasury company in the UK specifically?
Well, so probably not everyone's aware of this, but you cannot be a company that is a pseudo fund. It's against the rules, and you're not allowed to do that. What you can do is you can be an operating business, and you can choose to adopt a Bitcoin Treasury strategy. That's perfectly fine. So because I've always run my life, or certainly for the last 10 years, not believing in fiat currencies and not keeping any cash, and sometimes at cost to my expense, because if you keep a volatile asset, it doesn't always work out when you need the money, because it might be lower than what you paid for it. Then I decided that we would run our corporate treasury in exactly the same way. So the challenge is more, do you do you understand the regulatory framework, and or do you have appropriate advisors that can help you understand what you have to do? And that's the challenge, really. It's not so much, sort of, can you sort of get around the rules or anything, because you shouldn't try and get around the rules. The rules are there for very valid reasons, but as far as we're aware and as far as we're concerned, the UK is incredibly welcoming to any business that is operating within the regulatory framework. And in our case, that's a web design business that we're trying to grow, that we've got interesting potential acquisition opportunities. And then alongside that, we've got a Bitcoin treasury, because as I believe personally, there's no point in holding anything in pounds or dollars or euros or indeed any other asset other than Bitcoin. So that was the main challenge, really, just making sure that people understood what we were doing and how we were trying to do it. And so far, everyone's been quite welcoming in that regard.
You mentioned the regulatory framework and having the right advisors around you. Would you say you have those now? Hi team, a quick interlude to ask, what if you could offer your clients Bitcoin exposure on a regulated investment platform? Because that's what my friends at P1 have done. They've created a discretionary model portfolio invested into companies with significant operations in digital assets, available within general investment accounts, ISAs, and pensions, and managed by award-winning investment professionals. With P1's digital assets portfolio, you can access a professionally managed portfolio of listed companies powering the digital asset economy, such as miners, blockchain infrastructure, payment services, and listed companies with Bitcoin treasury strategies. It's Bitcoin and digital asset exposure built for regulated advisors. It's diversified, actively managed, and with full transparency. P1 created the portfolio for advisors who see the long-term potential of Bitcoin and the digital asset economy, and who are starting to look at how best to facilitate exposure for their clients. It is packaged in a way that fits into an advisor's day-to-day investment advice process. So if you're an advisor who wants to offer digital asset exposure without the operational headaches, visit the URL in the show notes or use the QR code on screen. P1, bridging traditional finance and digital assets. Only available on the P1 platform and via regulated financial advisors, and the value of investments can fall as well as rise, and you may get back less than you originally invested. Now back to the show.
Yeah, so we've grown in size as a business. I think that's clear for everyone to see. We've gone from a couple of £1 million market cap to approximately a £200 million today, fully diluted market cap. So that's quite some growth. And as we've grown, we've got some new advisors, and that's all just a natural part of growth. I think on all aspects externally, we've got great advisors. But that's not to say that as we grow from here over the next 6, 12, 18 months, that we're not going to, get new advisors as we grow as well, and hopefully maintain the current advisors that we've got, as we grow. Because I believe that as a business grows, it's not only the people inside that should benefit, in addition to the shareholders, of course, but it's also the people that have supported you, the advisors. So yeah, we do. Internally, we've grown the team a little bit. So we've got some really good quality people in the company. It used to be primarily Alex and myself, so 2 people in the business. My wife was a shareholder; she still is a shareholder, but 2 people working day to day in the business. Whereas now we've got 10 or 11 people, including all the directors, the non-executive directors, and we've got some really good quality people. Now, we announced a couple of weeks ago Randall joining our business as a non-executive director. He's the senior non-executive director for the Games Workshop, very, very successful company that, I remember from my childhood. We recruited a CFO, Albert, great career, really good person. So we've got people that, we wouldn't have been able to recruit these people when we listed the business originally. And that's all part of growing a business. I've often said in these podcasts that a business is only as good as the people inside the business, and that extends to the advisors as well. So yeah, I think we've got a pretty good team, and we'll just keep trying to grow it appropriately as we grow from here.
Great. You mentioned the growth since IPO, and it was an incredible IPO. So, within 2 or 3 months, massive sort of increase in share price, and then it's been a tough few months since. Are you able to talk about that? What are your thoughts on that potential run up, the tough situation since, any projections for the future?
Yeah, so we've often said that it's been the most successful in the IPO in the UK ever. We've got data that backs that one up, in the sense of it's the most successful IPO in the first 2 months in the last 20 years. I think that's the legal definition of that. So yeah, it was great. It was lovely to see everyone's support. When we came out as a public company, it took a couple of days for the word to sort of get out, but it was incredibly fast. So you're right, yeah, we did absolutely rock it. I think intraday it went to something like £6, which is quite incredible when you think that we IPO'd at 2.5 pence. And you're also right that over the last 4 months or so, it's been pretty brutal for all of the shareholders. There's been sort of trading opportunities for those that like to trade these things. Some quite good rallies over days and weeks and things. But the trajectory over the last 4 months has been down. Now, what somebody once said to me is that markets are always wrong. So they're always either overpriced or underpriced, and that's why you have an opportunity. And I think that's right. With the benefit of hindsight, perhaps we became overvalued. And I would say that right now we're, in my opinion, definitely undervalued. We're approximately a 1 MNAV, so we're priced at roughly the assets that we hold, no value being given to the operating business. And importantly, no value being given to the Bitcoin per share growth that we've consistently delivered since we listed. So, if markets are always wrong, then at the moment, I think that's wrong in terms of underpriced. Maybe there's things that we can do longer term to sort of improve that. So can we build something into the model to try and put some sort of protection so that the MNAV doesn't get so extended? Would that be a sensible thing to do for an equity? I don't know, perhaps not. Would it stop people, buying a local top? Perhaps it would. We always look at all of these sorts of different ideas to, try and work out how we can improve, because we want to improve everything. Do I think that the company is going to be way higher in 12 months? In my opinion, it will be. But, obviously we'll have to wait and see. I'm not allowed to give any sort of formal targets and projections. So I can't really comment on that. But I think that everything that we're doing as a business is exactly what we should be doing. And if I look at business today relative to that current all-time high, the business is a multiple better now. We've got higher Bitcoin per share. We've got a better team. We've got more concrete near-term catalysts. So, I think that's been one of the most interesting things to me running a public company, in the sense of the disconnect between the business and the share price. The share price is the market's current opinion of you, I suppose. Whereas, the business is quite different to the share price at, in many, many ways.
Yeah, I would agree. I'm always taken to the phrase, markets can stay irrational longer than you can stay liquid.
Yeah, that's certainly very, very true. And that's why I'm not personally a massive fan of high leverage. for that very reason, I like keeping things relatively simple. That's not to say that we won't explore those things or perhaps do those things in the not too distant future, but I certainly am not a fan of, massive leverage. And, if we look at what we've seen over the last, I don't know, 6 weeks in the Bitcoin world, I think that's a very good example. And we're probably getting to the end of the damage that's been done by, those 50x leverage products that sort of caused a bit of pain at the early part of October.
Well, hopefully, as a shareholder, I will certainly hope so. This is a podcast aimed at financial advisors, and I'm going to pretend that this is for them and not for me. Could you explain what MNAV and Bitcoin per share mean?
Yeah, sure. So if we start with Bitcoin per share, it's really simple. The Smarter Web company owns an amount of Bitcoin in its treasury. And then the Smarter Web company's got a number of shares in issue. If you want to go onto our website, you can see an analytics page which details the fully diluted shares in issue. So we factor in things like the pre-IPO warrants into those shares in issue numbers so that people can get in our opinion, a more accurate understanding of the shares in issue, the fully diluted shares in issue, against the Bitcoin holdings. Divide the two, and you've basically got a number which relates to the amount of Bitcoin that's held per share, fully diluted share in issue. MNAV is something that some people have got slightly different definitions of. What you need to do is you need to look at the market capitalization. Strictly speaking, you should use the enterprise value, but we'll use the market capitalization because it's easier to explain. So you basically take the fully diluted shares in issue and the share price. That'll give you a market capitalization. In our case, let's use an example of £200 million. And then you take the value of the Bitcoin held. So in our case, let's go for £200 million, just, approximate numbers to make the example easier. And that would give you a 1 MNAV. So you're saying that the market is valuing the company at the value of its Bitcoin holdings. Now let's use a different example of an MNAV 2. So what that would mean is that the market capitalization of the company was 200 million, and then the value of its Bitcoin holdings was 100 million. So the MNAV being above 1 implies that the company is valued above its Bitcoin holdings. And the reason for that is that the market believes that the company will grow the Bitcoin per share, and therefore that premium is worth paying. That would also work the other way around as well. So you could have an MNAV below 1, which means that you're not even valuing the company at the value of its Bitcoin holdings, let alone any future Bitcoin per share growth. So what we believe and what we've seen is that over time the MNAV will fluctuate, and at the moment in the market, many companies are round about the 1 level. But in our case, we've been above 5. In the very early stages, that's quite common in a Bitcoin treasury company. I personally think that if you deliver, let's say, a Bitcoin yield, which is, the sort of the measurement for the Bitcoin per share that you're delivering, let's say you deliver between 20 and 100% on that, then, 2 or 3 MNAV is very easy to justify.
Yeah, it's an interesting new metric, and I like to liken it to the PE ratios of typical equities. And people can get caught up on MNAV and MNAV expansion. So like getting to a 5 MNAV or a 10 MNAV, and it's wildly overpriced. And then you look at something like Palantir, which is in the triple digit PE ratios. And you're like, this thing's going to take 100 years to cover itself in terms of its earnings. And we're discussing whether a 2 MNAV is, wildly overpriced for Bitcoin treasury companies. You mentioned the pre-IPO warrants and fully diluted. Let's again pretend that the Bitcoin or the Bitcoin IFA audience doesn't understand that, and it's not me asking this question, what does that mean?
Yeah, so when we listed the business, we did a pre-IPO funding round, and we raised, I think it was £1.1 million from friends and family, to get some capital together. So when we did the IPO, we weren't saying to people, we haven't backed it ourselves. That was done several months before the IPO, and the price was 2p instead of 2.5p. But in addition to that, we gave all of those pre-IPO investors a 1-for-1 warrant, so that not for the first year, the warrants are locked, but for year 2 and year 3, they can effectively buy another share at the IPO price, 2.5p. I've had a bit of criticism since we listed for that, but what I've said to everyone is that, you've got to go back in time here, and you've got to look at the risk that people were taking, effectively investing in an unlisted company that wasn't guaranteed to list. And then also, most people didn't think that it would work this well in this short space of time. But it has. But those people deserve those warrants because they invested when other people didn't support or didn't know about the business, and it wasn't a listed business. But ultimately, what that will do is, when those warrant holders decide to exercise their warrants, it will increase the shares in issue, which is why we use the fully diluted number in our calculations, because it's showing for the impact of that, as opposed to waiting for that to happen. So if you went on the Aquis website today and you looked at our market cap, say it's £150 million, for example's sake, you should add on something, not 50 million, but just for the sake of the example, let's say 50 million, to get the true market cap, the fully diluted one, because warrants are not included in the shares in issue that you see on most websites until the warrants get exercised. But the best place to get all the numbers is if you go onto our analytics page on our website, because on there we've got all of the analytics on a fully diluted basis, and if you read the important notes there, you can see the definitions for all of these different metrics like MNAV, fully diluted shares in issue, enterprise value, all these things. But then you can also see a breakdown of all of the numbers. So you can see the shares in issue, you can see the pre-IPO warrants, you can see we did a funding recently which had some warrants in it. So you can see those. You can see we've got a Bitcoin denominated convertible bond. You can see the numbers of shares potentially that comes out of that. So we've made it as transparent as possible for anyone that wants to sort of read the information.
That's perfect. Thank you. What could financial advisors learn from Bitcoin Treasury companies, and what do you believe may be some of their blind spots? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will. Which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to thebitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's thebitcoinifa.com to book. Now, back to the episode.
So when I speak to my children about money, I have always spoken to them about the power of compound interest. And I think that's something that, certainly in the UK where I live, that most people don't seem to understand. The compound effect of saving and getting a return year on year is outstanding. And I think financial advisors would need to think about Bitcoin treasury companies in the sense of compound Bitcoin. So of course, first they've got to become comfortable with Bitcoin, and to start to understand that, in my opinion, it's the very best asset in the world. But if you don't want to subscribe to that view, that it's got a place in every portfolio, it might only be a couple of percent, but it should have a place in every portfolio because it's an asset class, an institutional grade asset class, a national level asset class nowadays, and it is the future of the world. It's a bit like when I started my career 25 years ago. It's a bit like if you had the ability to buy shares in the actual internet, as opposed to companies that sit on the internet like Amazon. So yeah, you've got to get comfortable with Bitcoin, and then you've got to understand the concept of compound Bitcoin. So that's the Bitcoin per share growth. Probably the easiest way for financial advisors to get comfortable with a Bitcoin treasury company is to think about the internet, and then think about the companies that have benefited from the internet, your Google, your Amazon, etc. So a Bitcoin treasury company is a bit like one of those companies. It's a company that's sitting on top of the Bitcoin network, that's using the Bitcoin network in different ways dependent on the company, and that's probably a good starting point for a financial advisor. And then what I'd probably suggest to any financial advisor that wanted to understand more would be two things. The first one would be to do as much reading, watching, etc. as you can online, but make sure that you go to the right sources of information. And then I'd probably suggest that they reach out to someone like you, who can help them understand the opportunities that's created from Bitcoin, relative to their actual industry and professional outlook.
Thank you for that. I would also recommend that. I really like that analogy. So Bitcoin essentially being the base layer, the foundation, the platform, in the same way the internet is for the likes of Google, Amazon, Meta, etc. I use some of those stats in my trainings for financial advisors, so that we're at roughly, I think it's possibly changed now, but we're at roughly 3% global adoption, maybe 4, maybe 5 now. But that is the equivalent of the internet in 1990, online banking in 96, and social media in 2005. So imagine being able to put 1 to 2% hedge, 1 to 2% of your clients' portfolios into those underlying technologies in those years, as opposed to, as you say, having to invest in all of the tech stocks through the 90s, having to invest in the banking stocks from 96 to 2008, or having to, just wait for the Meta IPO in 2012, as opposed to buying all of the social medias in 2005. So yeah, I think you're absolutely correct. And once you do start the reading, you start to realize that Bitcoin is this transformative best asset in the world. It is going to be the future. I also I show images of the famous images of the same street in New York from 1900 to 1913. 1900, there's one car. 1913, there's one horse and cart, and that's it, and it flips. And so, imagine just being able to short the horse and cart in 1900 with 1 to 2% of your client's portfolio, where you long the car, just in case this transformative technology takes off. So
you can see it in recent years as well. So, I set up the Smarter Web company in 2009, which was coincidentally the same year that the first block of Bitcoin was ever mined, the Genesis block, albeit that was at the start of the year. And I set up the Smarter Web company right at the end of the year. But 2009, in 2009, the first iPad didn't exist. I believe that was launched in 2010, because I can remember buying it with my company debit card, because it was for work purposes. So that's 15, 16, whatever years ago. And look at the world now in terms of how we all use the internet, So yes, we've been using the internet. In my case, I've been working with it for 26 years, probably using it for 28 years. And the internet's changed a lot over that time period. But just look, your New York example, 13 years. In our example, 15 years. The internet's completely different now than it was 15 years ago. And I think just in 5 years, certainly 10 years, Bitcoin's going to be wildly different to what it is now. This is the opportunity of not a lifetime and not a generation, but the opportunity of 100 years, maybe even 500 years, This is it's almost it's almost negligible for a financial advisor to not put the effort into understanding Bitcoin. Um, you know, if you're going to understand one thing, one new type of technology, one asset, it needs to be Bitcoin. It's quite staggering, and to be blunt, without wanting to alienate your audience, um, very disappointing that more financial advisors haven't got on board. But the thing that they need to remember is they're not alone. You look at Michael Saylor, who runs the biggest Bitcoin treasury company in the world, Strategy. He wasn't a believer in Bitcoin originally. The vast majority of them, these people that are quite supportive now, JP Morgan being another good example, the people at that company were not fans of Bitcoin initially. I still haven't met anyone that has put the effort into learning about Bitcoin that doesn't think that it's got a very, very good place in a portfolio. And I don't think that I'll ever meet someone like that either, because once you do the research, you can understand why it's got a place in everyone's portfolio.
Completely agree. Once you've done the 10 to 100 hours of research, you're generally on board, even if it's only with a tiny percentage. I mean, I know a business owner of a financial advice firm who is pretty on board, runs a node, right? So like he's ahead of most people, but he's still treating it as he's essentially going neutral. So he sort of says he's got about 2% of his portfolio in each of the Mag 7. It's comparable in market cap, so he's got 2% in Bitcoin. And I'm like, fine. He completely understands it. And I think you and I both know that 2% over the next 10 years is going to outperform everything else in the portfolio. So 2% is fine.
Let's hope for his sake that he doesn't do regular portfolio rebalancing.
I understand the reason for rebalancing, and I actually show the performance of Bitcoin on a portfolio over the last 10 years with and without the rebalancing. One of the major things that financial advice gets wrong, in my opinion, is they equate volatility to risk as opposed to volatility to return. And so if you do rebalance, you get asymmetric upside with imperceptible changes to volatility. If you don't rebalance, you get even greater upside, but your volatility starts to creep up, right? So like a 10% allocation 10 years ago, your volatility is now at 50 vol, and they like to keep it below sort of somewhere in the range of 15 to 20 is like the absolute max. You're at like 50 to 60% vol, but you've had 3,500% upside. So it's like, and the Bitcoin that was 10% now represents 95% of your portfolio. So unfortunately, there will, I think most, certainly in the short term, most portfolios will need some rebalancing. But what I like to say as well is it depends where your client's at in their life stage. If they're an accumulator and they're in their 40s, then allow the volatility. They need it. They need the upside. But if they're in their 60s, 70s, they're decumulators. I also show data that shows if you'd have kept your entire portfolio in cash, 90% in cash, 10% in Bitcoin. So 90% in cash, I had to use that Treasury. It's from nakamotoportfolio.com. I'm sure you're aware of it. So I had to use like Treasury bonds or something that's returning 3% a year. And just 10% in Bitcoin. Since 1st of January 2020, it's returned 158%. It's 18.55% per year. It's better than any fund, and only 10% of your portfolio is in cash. So for decumulators, that's a really good thing, because what you can do is say, look, we're going to move 20% of your portfolio to cash. 80% is going to remain invested. The cash is to cover the next 2 or 3 years, to cover any short-term volatility. But of that 20%, we're going to put 2% of it into Bitcoin, so that even if the Bitcoin outperforms, you end up just sort of cash neutral, and we can keep the rest invested for later in your retirement or for your beneficiaries. Although we'll see what happens in terms of the inheritance tax position for pensions, because they seem to be disincentivizing any pension investments.
It's quite funny, though, that you should say that, though, because I've thought that for a long time, and I've tried to explain it to my father-in-law, actually, that, he's, I'd imagine, probably got quite a traditional portfolio of, bonds and equities, bonds haven't exactly performed very well the last few years. And what's the point in a traditional bond portfolio? I can't see what the point is, if I'm honest. Now, if and I've got to stress that I'm clearly not a financial advisor. I have almost 100% of everything that I own in Bitcoin. I don't even really keep any cash. So Bitcoin Treasury companies, and a very small amount of other things, and a house. But if I was a financial advisor, and I was recommending a portfolio to, say, a 70-year-old or something like that, that's exactly the portfolio that I would have recommended for the last few years. Basically, I would have probably gone sort of 96% cash, something like that, or cash and a bit of NASDAQ or S&P or something like that, very, very small amount. And then I would have gone for 4 or 5% of Bitcoin, because that very, very small amount of the portfolio would have given you the outperformance most years. And the cash is cash, isn't it? Yes, it's going to lose its value, but for that, someone at that stage in the game, is a very, very sensible thing. Far better, in my opinion, than sort of 100% in equities and bonds, or 90% in equities and bonds. And I think that's quite exciting. And then also, it's really exciting right now, because now we've got the emergence of the new class of Bitcoin Treasury financial instruments, preferred shares, that Michael Saylor has also pioneered. That can give people that don't want the volatility, and a lot of people shouldn't expose themselves to the volatility because they're not equity or Bitcoin investors. They don't want a high vol stock. They basically want something that's going to give them performance, and that's what Bitcoin can offer. If you don't want to accept the volatility, you can buy something like a Saylor Preferred, and you can get, let's say, a 10% yield. You can be further up the food chain, in terms of a creditor position. And yes, you will not get the performance of Bitcoin, but through Bitcoin, a company can offer a much better interest rate, coupon, dividend, whatever you want to call it. And that's really exciting as well. So for the future, I think you'll see more of those things. So you'll see people, going back to our analogy of, where elements that sit on top of the Bitcoin network, like companies that sit on top of the internet, you might see more and more of these companies creating these other ways that people can indirectly access the benefits of Bitcoin.
I'm going to ask you to explain those preferreds because, and I'll be honest about this one, I don't fully understand them. So would you be able to explain them like you would to a 5-year-old, how they work? And then the second part of that question is, are there any plans for Smarter Web to launch something similar?
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode, or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm, and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
Yeah, so let's deal with the question in two parts then. So what is a preferred share? So effectively, it's just another equity. It's a bit like a bond structured as an equity. So what a company might say is, it might say, I'm going to raise some money, just like you would do an IPO. In fact, Strategy, one of their IPOs, has been the biggest IPO in the US this year, one of their preferred shares. So yeah, you structure an equity, and then that equity says to the shareholders that we will pay you, a dividend, which is the equivalent of a coupon with a bond. And then that might be paid monthly, it might be paid quarterly, it might be paid annually, it might be rolled up, it might be guaranteed, it might be intended to be a certain amount, but with the protection for the company that they don't pay it should they not have to pay it, and then it roll up. All these sorts of different structures, but there'll be some sort of an offer in terms of an expected dividend. And then that will give you the yield to you based on the price that you pay. Because it's an equity, it's going to trade. So if it freely trades, goes up in value, down in value, that dividend is going to decrease in percentage terms, or it might be that the company, the issuer, tries to hold the price at certain levels so people can buy it all day long over many, many weeks and always get approximately the same dividend, so you could use an ATM, i.e. issuing more shares into the market to suppress the price, or buy back shares to hold the price. So in simple terms, it's just another equity. So it's a second or a third or a fourth equity that a company can issue in order to give people a different way of getting exposure to that company. You might also build in a convertible element. So you might say that the equity can be converted into common equity, at 5 times the share price, when it was issued, or something like that. Perhaps the most important part of it, though, is its permanent capital. So if I borrow some money from somebody, so the Smarter Web company borrows £10 million from you, Dan, then we've got to pay that money back to you. So we might have a deal where we've got an interest only arrangement, but the capital has to be repaid at some point. A preferred is different. It's permanent capital. So once you've convinced the person to lend you the money, you do not have to pay that capital back. You have to meet your obligations, which is the dividend effectively. And that's fundamentally different, because if I borrowed £10 million from you, Dan, you might say, that's absolutely fine, Andrew. You've got £200 million worth of Bitcoin. I'm perfectly comfortable with that. But you might say, if your Bitcoin dips to, £100 million, I want my 10 million back, because I'm worried, because, rather than it being 20 to 1, it's 10 to 1. So a preferred is permanent capital, which in simple terms means that you've got to convince someone to lend you the money based on your financial position at that point in time, as opposed to them continuously monitoring your financial position. And that is quite important when you've got your treasury in a volatile asset such as Bitcoin, because the value of Bitcoin changes over time. And the answer to a Bitcoin treasury company that perhaps isn't in a position to do preferreds right now, which we'll come on to in a minute, is maybe a very, very small amount of leverage is sensible. So the second part of your question is the Smarter Web company going to do these things? And the answer to that is probably, or potentially, whichever one of those two words the lawyers would let me use. So I need to check that one with them in due course. But I think it's safe to say that it's fairly likely if there's demand for those things, but not right now. I think that you need to be a multiple the size of us to offer something like that. I think there's tremendous opportunity and tremendous growth ahead of us, doing things along the lines of what we're doing at the moment, in addition to obviously growing our operating business. But I think at some point in the not too distant future, I think that it will make a lot of sense for us to explore that sort of additional equity line.
Thank you for that. And thank you for the explanation, because I'd never really fully got my head around those preferreds, and now I have a much better understanding. And I think you're right. It's a much better way to raise capital, to have almost that perpetual flywheel, than constantly taking out loans that may have margin calls at certain levels of the Bitcoin price, which is certainly my understanding of how Strategy were raising capital previously.
Yeah, it's like they did really well in many ways out of raising money through convertible fiat-based bonds. But the problem with a convertible fiat-based bond is the the people that offer you large sums of money, and we've been offered tremendous sums of money from those sorts of convertible outfits, is they're going to hammer the hell out of your stock, because they don't really care about what they're investing in. They're just playing the arb of that particular product. Whereas a traditional loan is beneficial in the sense that you wouldn't offer any convertible element to it necessarily. But there's normally some sort of collateral obligation which would be linked to your underlying assets or other assets. So preferred share is kind of like a much better way of doing a fiat-based convertible bond. Way better. But the barriers to entry are slightly higher. So yeah, there's lots of things. We could talk about this all day. There's lots of different tools that you've got in a Bitcoin Treasury toolkit. Some of them work better when you've got high MNAV. Some work better when you've got low MNAV. Some work when you've got a negative MNAV. So the preferred is seen by many as the holy grail of the Bitcoin Treasury toolkit. I don't know, 70%, 80% certain that it probably is. There might be a much better thing that none of us have worked out yet. And that's part of the fun of being in a very, very new sector. You know, we've all said, Sailor included in this, that we're in year one of this new global sector. And we believe that this sector will become probably the most successful and most valuable sector in equity markets in the world, with some of the most valuable companies in the world, but it's early days for this emerging sector, the Bitcoin Treasury sector.
I would definitely agree. It's incredibly nascent, very exciting if you're a believer in Bitcoin. And it sounds like with these preferreds, we're essentially completely disrupting the financial ecosystem. So you've got the equity share price for the volatility, both to the upside and the downside. And then you've got the preferreds that are almost like the bonds. So you could almost have a classic 60-40 portfolio, let's say, with 60% Bitcoin Treasury companies, 40% Bitcoin Treasury company preferreds, which are offering the yield, so that when the share price is down, you're still getting the yield, and you manage your portfolio like that. We've
talked a lot about volatility, but just sort of, I personally don't think it's any great secret, but I don't think it's fully appreciated by everyone. The key ingredient is liquidity. So if you look at our stock, for the last 6 months, we've probably been over half of the volume of all of the stocks traded on Aquis. So liquidity is essential. From an investor's point of view, you want liquidity, because the more liquid a stock is, the more true the price is. If you've got something that's illiquid, the price doesn't really mean anything, in all honesty. You wait and see somebody buy or sell a lot of that stock and you'll see the price change. So liquidity is really, really important, but it's also important from the other angle. And if we go back to our prefs, that's really important, because with a Bitcoin Treasury company, you can do something that's similar to what they call an ATM in the States, which is an at-the-market offering. And what that means is that the company can effectively, through an agent, sell its shares into the market. And that's essential on that prefs model, because normally if you look at bonds and preference shares, they're quite illiquid. Whereas, if you look at what Sailor's done in the States and actually recently in the EU, these things are quite liquid. And they're becoming more and more liquid all the time. So you want to be able to wrap an ATM facility around the preference shares so that you can make the most of it, and that's really important too. And liquidity is something that I don't see talked about enough online, in terms of why it's so important for a Bitcoin Treasury company.
Why, or where is the liquidity coming from for the Bitcoin Treasury companies? Why is there so much liquidity?
Well, it's demand, isn't it? demand. So, there's many people out there across the world. If I look at our stock, historically, sometimes the US liquidity can be greater than the UK. At the moment, the UK liquidity is greater than the US. And we also get reasonable liquidity on some days from the EU. And let's say in the future we managed to uplist to the LSE, which is an aspirational goal of ours. I suspect the liquidity would be even greater. So liquidity comes from the globe. It comes from different entities. So that might be retail investors, it might be institutional investors, it might be high net worth individuals, it might be people even shorting it. I'm all up for people shorting our stock. The more liquidity, the better. So it comes from everywhere. The good thing about Bitcoin Treasury companies, which is very similar to Bitcoin, is the sense that it's a grassroots movement. So there's not many things in finance where you as the retail investor, or in the case of your audience, the IFA on behalf of their clients, gets to get in before a lot of the privileged money. Whereas Bitcoin and Bitcoin Treasury companies is one of the few things where the common man, the man on the street, the man like us, can get in there from the start and get in there before the big people that normally get the better deals. And that goes back to how we did our IPO as well. We made it accessible to everyone right from the start. We didn't make it accessible to a few lucky people that, or in the case of some of these deals that have been done badly, unlucky people. We made it accessible to everyone. So liquidity is something that we work very, very hard at, to make sure that we communicate to people, which adds to the liquidity. Because the liquidity is something that the company benefits from. If we look at the money that we've raised to date, approximately 25% of it has come from our ATM style facility that we've got, which is something that we've used, to different degrees of success in terms of quantity of money that's been raised over the last 4 or 5 months, however long we've had that facility in place for. But yeah, liquidity is really, really important. And in our case, it's global.
That's great. Thank you. There's a couple of things that you mentioned there that I'd like to touch on. I'm looking at time, wary of that. So let's try and get those both in. You mentioned strategy entering the EU, and there's potential threat that they could come into the UK earlier than Smarter Web's able to offer those preferred. So that's the first one. And then the second one, we're going to come on to any news on that aspirational LSE uplifting.
Yeah, so I would politely sort of argue with your choice of words there, Dan. Threat. It's not a threat. It's a welcome other person in the market. The more people spreading the word of Bitcoin, helping to shape financial services for the future, building things on the Bitcoin network, the better, really. So, I don't think I'd go as far as to say I'd like Saylor to beat us to the prefs in the UK, but I won't be disappointed if he does. Maybe it'd be great if we did it at the same time. I don't know, but what will be on that front, and good luck to them if they get there before us. And if they do get there before us, they'll do a lot of that heavy lifting for us. So we'll see on that one. But the more awareness and the more regulatory comfort that happens, with what we're doing, the better. So yeah, we'll see what happens on that one. In terms of the LSE uplisting, or potential LSE uplisting, as we should probably call it, what our lawyers have told me to say is that it's an aspirational goal, and I will make no further comment on it.
Okay, well, I know that the very active Smarter Web community on X, of which I am a member, are very excited for it. And I know that you have said it's an aspirational goal, and we're all very proud that there is that aspiration, and that we know that you and Jesse are working hard on that behind the scenes.
I'm very excited too. I've just been told that I'm not allowed to talk about it.
Okay.
I guess when things get closer, they tell you can't talk about them. Maybe that's how it works.
Well, perfect. Thank you for that
Aspirational goal,
exclusive.
yeah.
There's one last thing that actually I wanted to discuss with you, which is Bitcoin's performance this year has been relatively underperforming in terms of we've typically had this 4-year cycle, 3 years up, 1 year down. 2025, in theory, is supposed to be year 3 up. At the time of recording this, I've actually just seen that Bitcoin, compared to the 1st of January, is now down by a few percent, 2, 3, 4%. So in relative performance, looking at 1 year performance, which is never great, but it seems to have underperformed. And there's a thought that has been sort of going around my head is suspicions around institutional adoption of Bitcoin. So the likes of BlackRock's IBIT ETF entering the space. And Warren Buffett has a very famous quote, I believe, which is that Wall Street will tame Bitcoin. And one of the benefits to Bitcoin investors is the volatility, especially to the upside, right? Where we've typically had 3 years up, 1 year down. So what are your thoughts on that? Do you think that that's going to ring true, or do you believe we've still got significant performance ahead versus traditional assets?
Yeah, so as an asset becomes more mature, it's probable that the volatility decreases slightly. I think the biggest problem for Bitcoin this year that we're seeing right now, we've been seeing for the last month, is I think it's probably underperformed for the new people that have come into the space. So you have people come into the space this year that have wanted fantastic, very, very quick gains. And then aside from that, this year you've had some of the other cryptos, take some of the flows out of Bitcoin potentially. So, for anyone that's been invested in Bitcoin for a long time, I don't think that this year is particularly disappointing. It's just not particularly exciting. I personally believe that we're seeing some sort of flush out, because that seems to me to be the way the markets work. Before we get that move to the upside, but that is just my opinion. One of the best ways of describing what we've seen this year, which I was talking to somebody about the other day, is it's almost like a sideways crash. So yes, the price hasn't gone up significantly, year on year, but equally it's not gone down significantly year on year. And if you look at how sentiment seems to be terrible at the moment, not in my household, but in a lot of people on X, you'd think the world's ending. Like before we got onto the call today, I think Bitcoin was about 90,000 ish. And yes, that has come down a lot over the last week, 2 weeks, whatever. But if we had been talking 2 years ago and we said we're going to be sort of saying that sentiment's in the gutter and Bitcoin's at $90,000, I can't even imagine how that conversation would have then gone after that. So let's zoom out a little bit. It's still the best asset in the world. It will always be the best asset in the world, irrespective to what the price is. The supply is still fixed. 21 million will only ever exist. Approximately, 1 million left to be mined, something like that. So it is the same thing that it was a week ago, a month ago, 6 months ago, a year ago, 10 years ago. But it's volatile. As much as I don't want to offend anyone, I think that some of that volatility coming back into it is good. I think my only criticism of Bitcoin this year is perhaps it's been a little bit boring at times, and I think it needs to have a bit more excitement. And going back to some big people coming into the space trying to tame it, good luck to them. It's a fundamentally different asset to almost everything else in the world, in the sense that it's got a fixed supply that it will only ever have 21 million units in existence, albeit perfectly divisible units. So you can't tame it, as far as I'm concerned, because of the limited supply. That supply is getting more and more limited every single day as people that believe in the network are adopting the asset. I think it's fundamentally different to everything else. And I think we'll see that in 5 or 10 years' time when we look back and we say that we had an opportunity to buy Bitcoin at $100,000 and we didn't, well, not in my case, I bought every single bit of it that I could. But in most people's cases, they didn't, increase that allocation to something more meaningful than what it is, or from 0 to 3% or 5% or whatever. I think that people will be looking back and they'll be saying, just like they've done when they look back to 1999, 2000, admittedly before the dot-com crash then. So you had to pick carefully. I think that's what we'll see in 5 or 10 years' time. We'll see people looking back with regret that they didn't, adopt a bigger position in Bitcoin to what they're currently invested in.
Or at least get off 0. And you're absolutely correct. I mean, imagine current sentiment is absolutely destroyed. And if we'd have said in November 22 at the FTX collapse to $15,000 that 3 years into the future we will have similar, if not worse, sentiment because Bitcoin will have crashed to $90,000, I think people would have ripped your arm off for it at that point. And you're right in that I think it is boredom. Like Bitcoin, I think a lot of people got into Bitcoin and crypto in COVID 2020. And then we had December 2020 through sort of April 2021, where Bitcoin just basically went up like 1 or 2% every day for 3 or 4 months. And people think that that's what it should do. So this year we've had basically, what are we? Let's say we're 300 days into the year. We've probably had 280 days of nothing and 20 days of movement. And everyone's just bored by it. We are just ranging. I don't think this is the case, but if the bear markets are now just sideways ranging, I think we'll all take it. Okay. Andrew, there's one question we always end on, which I'm going to ask you after this one. In terms of the audience, financial advisors, what have I not asked you that I should have?
Yeah, that's a tricky one.
It's okay if the answer is nothing.
Well, I guess one question that I don't get asked hardly ever is, how do you cope with the volatility? And if you did ask me that, I would say, obviously I enjoy it like everyone else when it's volatility to the upside, and but it doesn't really bother me, the volatility to the downside. In my new role as the CEO of a public company, I emphasize and I feel for our shareholders who don't fully understand volatility and the discomfort that it may fall. But for me personally, it doesn't make any difference to me because I have zero doubt in the asset over the longer term. That's a question that I don't get asked very often. But I can't think of anything else that it would be worth asking.
Yeah, and that's something that I always say to financial advisors. Day to day, Bitcoin could be volatile, same as any asset, same as any commodity, right? Commodities tend to be more volatile than equities in general. But if you zoom out, the 200-week moving average for Bitcoin has never declined. Just recently went over $50,000 or $55,000. The advance is permanent. The declines are temporary. Zoom out, think in decades. As financial advisors, we are supposed to think in decades for our clients so they can focus on the most important thing, which is the present. So if we're allocating to an asset that historically has never declined in terms of the 200-week moving average, if that continues over the next 2 decades, this is probably an asset they want to be invested in. Final question, Andrew, one we ask all of our guests. What is one positive thing that Bitcoin has brought to your life outside of number go up?
So the thing that I like about Bitcoin above all else is that it treats us all equally and it gives people hope. And I think that that is incredibly important if you want to align your personal financial situation with something that we've all chosen to align ourselves with, I think that's great. But for me, in my sort of relatively unique situation, I think it's something that some people won't have quite realized. And I set up the Smarter Web company in 2009, so call it 15 years ago. It was profitable for every year on a small scale. And it's a business that I'm incredibly proud of. We've got 250 plus clients. I love programming. I love designing and building websites, helping people with online marketing, albeit I don't get to do so much of that now because, we've got different people doing that in the company. And Bitcoin has effectively given my business a new wave of life. It's taken the Smarter Web company to be known by more people than I could ever dreamed about, to give us the chance of growing the business into a multiple of what it is today. And none of that would be possible without Bitcoin. So Bitcoin has completely changed the Smarter Web company to give life back to a business that has, got almost nothing to do with Bitcoin. We started advertising Bitcoin on our website in 2022 as a way that people could pay us. But other than as a medium of exchange, it's got pretty much nothing to do with the core business. But Bitcoin has breathed the life back into the Smarter Web company and has given us the opportunity to grow that business. So just in the way that we were talking earlier about preferred shares, people that don't want the volatility that is associated with Bitcoin can have something better than they could get otherwise, better in my opinion. And that's the same for the Smarter Web company. It's breathed life back into the business and is allowing us to take it to a much, much greater level than we could do otherwise. And I think that's really cool. And I hope that we see that with many, many more businesses that choose to adopt a Bitcoin Treasury policy that arguably don't have any real link to Bitcoin. And then over time, they do more and more and more to contribute to the Bitcoin network. So it's kind of cyclical.
I love that. So a new lease of life and hope for the future. Brilliant. Thank you very much, Andrew. Have a great day.
Pleasure.